Today we're going to talk about a hidden gem you'll find super interesting. They manufacture this. This is called a cannula. You probably recognize it. It's used in an IV drip. People also call it a butterfly. Now this device, apart from several other devices, is what this company manufactures, like the blood bank bag that is used, or even the IV bags. We'll talk about all that they do, but one interesting thing is they have 15% market share in the devices they do globally. So it's a nice pehlawa business. Let's find out what this company is. The company we're going to talk about today is Medicure, started by Jugal Kishore Baid in 1995 from Delhi. Now at that time, they were already in the medical equipment manufacturing business, but they were contract manufacturers, which means they manufactured for other brands and supplied. But at that point, Mr. Jugal wanted his own brand, so he started Medicure. And he started with small syringes just like this. And then they even started manufacturing equipment that treat things like cancer, so for chemotherapy or for even things like dialysis, etc. Now they have all sorts of medical equipment. And the interesting thing about the company is that they have a great distribution network. They're actually in 5,000 different hospitals. And in the medical business, it is actually very difficult, whether you're supplying medicines or even medical equipment, to enter the medical industry. Because generally, there are so many things you need to look after when you get into a hospital. Most companies or most institutions do not want to entertain new brands. The distribution network itself is a huge moat for this company. That's why their presence in 5,000 hospitals is actually a good thing. And this has led to a 50% market share in India and a 15% market share globally. In this video, we'll talk about the profile of this company, the financials of the company, how it's going to grow its R&D, and also red flags. Would love to know what you think after you've seen the entire video. Now, to achieve that distribution network, it actually needs to have manufacturing and logistical capabilities. So, do you think that their manufacturing is only in India? Well, they have 5 facilities in the country, but they also have facilities I can see over here in China, Egypt, and Italy. That's almost every continent, so that they can manufacture and supply in those continents. They actually supply this to over 110 countries, and 70% of their revenue comes just from exports. Another thing you should look at in companies in the medical space is their R&D, because if they don't have research and ownership over products that they exclusively can build, what will they sell in the future? It's the way you figure out whether a medical company can actually continue for 10, 20, 30 years. So let's look at their patent profile. I can see that they have 300 patents in their name and 190 patents which are actually pending approval. Now this is interesting for 2 reasons. One, once you own a patent portfolio, you actually have ownership over certain areas of the market and no one can copy you. I mean, if they do want to copy you, they have to take permission and pay you royalties for a certain period of time. Also, 190 patent pending. This is good because it means that they're constantly trying to innovate and find out new patents that they can have ownership on. And usually, companies would spend 1 to 3% on R&D. This company spends 2% yearly. I think they spent about 10 crores in FY19, and they spent 12 crores in FY20, which is exactly about 2%. So their R&D area actually looks pretty okay. Now, if the company is so good and we have all these things over here, why not we have a look at the financials? I'll simply read it out. I have it open here. So first, I'm going to pick out 3 things that I really like, and then we'll start with the profit and loss, then we'll go through the balance sheet, and then the ownership. So one thing is interesting, it's worth 7,100 crores, is almost $1 billion. That should not matter. Look at the ROCE and ROE. It's 17 and 14%. It's actually not bad at all. Anything above 15%, I always think is great. You can see that the industry P is 29. Again, this should not matter too much to you. It's been profitable for a while now, and they pay some dividend out, but not really. So let's look at the profit and loss on a yearly basis. So the first thing we'll do, we'll just look at the top line, see if it's growing. If you start from 2011 to 2017, it's gone from 173 crores to 259, 390, 400, not bad. Keep moving forward to March 2022, and that 450 goes to 600, 687, and almost 900 crore rupees. So there's been a nice growth trajectory over here. This reminds me of Warren Buffett talking about these long-term competitive advantages which actually bring in profits. So I guess we can see that over here. So let's see what their expenses are. Sales to bada, but what happened to the expenses? We can see that if you jump to the operating profit margin, you can see that they make between 22% to up to 28% on the operating profit margin. This means sales minus all operational costs brings you their gross profit. And they make 200, 204, 213 crores as a profit. We can see that they're also paying interest, but the interest portion seems really low. So if you compare 213 crores as their operating profit, out of that they'll pay 4 crores interest or 11 crores interest in a year, which is fairly a low amount. And then we can see there's profit before tax and there's a net profit. The next thing you should look at is EPS, which is earnings per share. I'm sure you already know this. On a per share basis, how are the earnings growing? So you can see over here that the EPS has gone from 2.46 all the way to 6 in 2017. And there onwards, EPS of 6 has grown to 10, 14, and 2022, it is 15.28. That's not bad. It's growing between 20 to 25% almost yearly. I can see 1 year in 2017, it is almost 40%. This is a great way for you to understand from an investor's perspective whether this company's profit is actually helping the investor's share grow. That's why I look at EPS and not only at operating profit or only at net profit. So we can see that EPS is growing. This is also a good thing. We can also see these numbers in terms of a percentage. So over the last, say, 10 years, what is the average growth rate in, say, sales? We can see in 10 years, it's a 16% CAGR growth. It's not bad. And the profit growth is 22% over 10 years. The stock price, when you're doing fundamental, you probably shouldn't look at that, but the 10-year CAGR is 35%. Of course, this doesn't mean it'll continue to do that, but it's an interesting indication. And the return on equity is another way to see that if the company was an asset, actually it is an asset, how is the company giving a return on itself? That's one way to look at it. And the 10-year return on itself is 20%. Finally, let's look at the balance sheet. I'm going to jump straight to the reserves. The reserves is very simple. Bank account में कितना liquid पैसा है? कितना पैसा है इस company के पास is what reserves means. So you can see that reserves has gone from 67 crores to right now 1,000 crores. But I want you to notice something. See that basically reserves comes from what? Net profit goes back, right? As you make a net profit after paying taxes, it goes back into your reserves. Now it's adding about 50, 100 crores every year, sometimes even lesser than that. But in 2020, the reserves went from 390 crores to 900 crores. That's quite a jump, right? So ये net profit से तो नहीं आया होगा. So how did it come? If you stay with me a minute more, I'll tell you where this has come from. Next, we can see that borrowings are also growing, but they're growing fairly slowly, so nothing to worry about. In the cash flow statement, you'll find something interesting. You have cash from financing activity, where we can see proceeds from shares plus 400 crores in 2021. Now, this means the promoters sold equity. So startups aren't the only companies which are raising money by selling to investors. Large companies also do it, but they do it in private placement mode with FIIs. So this 400 crores has come from there. Let's scroll down and see who invested. So you can see that the promoter still owns the 44.76%. In fact, in June 2022, the promoter's stake has gone up from 44% to 53%. That's a good thing. And you can see that FIIs went from 14% to 15%, and it's increasing. This means that that equity that was sold, a large part of it was probably bought by FIIs and DIIs. Generally, this is considered a good thing. And finally, let's talk about the red flags. I mean, what could go wrong with these companies? We can identify 3 things. The first is that there are many small, unorganized players in the market that may manufacture locally and just supply to the nearby hospital. They may also compete on price, maybe the quality may be iffy, but the problem is that smaller players nearby pose as a threat to this company. The second threat could be cheap duplicates from China. Now think about it, at the end, although this is high-end equipment for medical devices, it is plastic and there's a petrochemical angle to this as well. So all of this equipment, the raw material that is built in China, China can actually build the same products as duplicates at a cheaper number and flood the market in the country. Of course, distribution may still pose as an issue for them, but it is one threat or a risk that this company still has to face. And finally, the big daddy of them all, the US FDA. I'm sure you've read about it. So many companies see their fortunes go overnight when the US FDA suddenly bans some of their drugs. We see it with all these companies manufacturing medicines. The same is true for equipment as well. If the US FDA bans or lets go of some of these equipment, suddenly 70% of those export that this company is getting, some part of that may be hit with a dent. But I guess this is something that any medical device company has to deal with. Now here's a task for you. Can you find 3 or 4 competitors of this company and list whether those guys are better than this company or not? I'd love to learn, and maybe we can find a better company than this. See you in the comments below, and don't forget to subscribe to LearnApp if you found this video useful.